Thank you very much. As Faris mentioned, the title today is Opportunities in Asia for the Long-Term Investor. So hopefully some of the things that we will be mentioning today will be relevant in the next few years, as well as 5 years or even a decade from now on. So the topic today will be divided into two sections. Section 1 on the opportunities in Asia for the long-term investor. So this is the topic that we will be focusing on. And on section 2, we will briefly run through some of the funds that are recommended by Fund Supermart. So we have Principal Islamic Asia Pacific Dynamic Equity Fund, Asia Pacific Dynamic Equity Growth Fund, as well as the Global Titans Fund. So these funds have a long-term track record, and I believe Fund Supermart is one of the has highly recommended these funds on their platform. Okay, so Asia is made up of many countries whose economies are different from each other and with different growth drivers. The outlook for companies, even within a single country, can be quite different. So even if we look at what we have in Asia, we have Korea, and what you see in Korea is also very different from what we would have looked in China, for example. So Korea, for example, has a lot of tech hardware companies, and the expertise required for looking at Korea, for example, will be quite different from looking at China, where looking at internet names as well as the consumer names would be more relevant. So we think that having rigorous research and dedicated analysts to cover companies is quite an important thing to have to identify some of these long-term ideas, as well as to have conviction to hold them. And secondly, we have noticed more structural teams in Asia than ever before. So what we mean here is that there is a democratization of companies that are able to participate in these growth drivers. And it's not only dominated by well-known names. So in the following slides, we will highlight some of these names, which hopefully will educate some of you who has never heard some of these companies before. So the 5 themes that we will be highlighting today include electric vehicles, deep domestic economies, new information technology. What we mean here, new information technology is highlighting some of their names that are beyond some of these well-known names, for example, Tencent and Alibaba. So we'll talk, we won't be mentioning about them. We will talk about some of the other names. We also have some of the examples of world-class manufacturers, as well as renewables, which is quite a new thing, especially for Asia. So now in terms of electric vehicles, now this is a very big theme for Asia as well as for the world. So if you look at the graph below, in 2021, EV or electric vehicles is 4% of in terms of market share in the world, in terms of sales, and this is projected to rise to 13% by 2025. And so this is for the world, but if you look at by region, China EV is expected to reach 25% by 2025. So in terms of penetration-wise, we expect China to be the main dominant region and will lead Europe as well as even US, whereby the penetration would be 15% and 10% respectively by 2025. So we think that China is a very important market to look forward to in order to see where the trend for electric vehicles is going. So we believe that the electric vehicles market will rapidly scale around 2024. So what we have here is the survey by Bain from consumers across US, Germany, and China, where almost 50% of them said they were considering buying plug-in hybrid EVs or battery EVs as their next car, right? So that's quite a significant number, almost 50% today. And we believe that going forward, this number will only increase. So in terms of the total cost of ownership, so total cost of ownership here refers to both the purchase price of the vehicle as well as the operating cost of the vehicle. And in this case, we expect sometime by 2024, we will see cost of ownership become very comparable. So in certain places like in Germany, the total cost of ownership is already on par with what we have today, which is the internal combustion engine vehicles. Apart from that, we also see more electric models, portfolio of electric models coming up in the market. And it is expected by 2023, we would see more than 200 different models in the market by 2023. So that will give the consumers a lot more option in terms of electric vehicles. So what we have today, if you look at some of the car manufacturers, most of them have approximately 1 to 2 electric vehicles or just a handful. And this number, as it scales up, will be quite a game changer for the consumers. Now, the price of the electric vehicle is also coming off. And one of the reasons of that is the battery cost. So the battery currently accounts for 30% of the manufacturing cost of a compact class electric vehicle. And if you can see at the chart below, the battery price is coming down quite consistently over the years. And as of today, we are close to end of 2020, we are $137 per kilowatt hour. And by 2025, we expect it will be less than $100 to $81, right? And in Asia, it is interesting because Asia has the largest EV battery suppliers in the world. And so some of these examples are CATL in China, LG Chem in Korea, Samsung SDI as well in Korea, Panasonic, a Japanese company, and BYD, which is a Chinese company. So we do have the leading battery makers in Asia, which will benefit from this theme of electrification of vehicles. So the second theme here is on deep domestic economies. So when we mean deep domestic economies, we refer to countries where the population is large enough. For example, in China and in India, where some of the companies, especially in consumption or perhaps even in healthcare, can rely on their domestic consumers instead of relying on tourists, for example, or foreigners. So some examples here on China in terms of the onshoring of consumption. So one example here is on the duty-free sales. So China, as you know, is a big consumer in the world, and they account for 1/3 of the world's duty-free sales. And in terms of the duty-free sales that is captured in China alone, it's only 10% in terms of the market share. So what this means that is a lot of consumption right now from China is happening abroad, right? And we expect this onshoring of consumption will only go up because this is driven by the government's policy as well. So Hainan, which is an important market in terms of the duty-free for China, has achieved 30 billion renminbi in duty-free sales in 2020, and it now targets 100 billion renminbi in the next few years. So you can see the number here is quite a phenomenal growth that we are expecting. And what we have noticed as well as the government, supported by government policy, we have also seen a lot of favorable policies that has been implemented. So for example, for your reference, for example, last year, we noticed that the government has also allowed the travelers to order online for the next, for approximately a month or so, right, or after traveling. So that is certainly one of the catalysts, or you can see that the intention is there by the government to increase the consumption onshore. So another example of a deep domestic economy is on Indian healthcare. So Indian healthcare market is underpenetrated in a lot of metrics. As you can see, the per capita healthcare expenditure in US dollar terms for India is $73. And that compares, for example, in Malaysia of $427, right? So India is extremely small right now, and there's a lot of room to grow. In terms of the infrastructure, in terms of beds per 10,000 people, you can see India as well is at the bottom of the spectrum. So that shows there is a lot of room to grow in this area. And what we have also noticed, especially in 2020, is that some of these hospital names have also ventured into, for example, e-pharmacy, telehealth, and e-diagnostics in the face of COVID, right? So that we think is the next growth driver as well, on top of the existing brick and mortar business that they have, right? So, however, the competitive environment is needs to be monitored, as a lot of well-funded companies with strong backers such as Amazon, Reliance, as well as Tata Group are in this market as well. So this area needs to be monitored, and I think certainly it looks interesting. And the next area we would like to highlight is the new information technology. So the first example here is on India. So India, we believe the internet market is quite nascent. So one example here is on Reliance Industries, which is one of the largest companies in India. And they have transformed their business over the last decade, venturing into different new growth drivers. So Reliance Industries started off as a refining as well as petrochemicals company. And then they have now ventured into doing retail over the last decade, as well as Jio Platforms here, which is a telco as well as internet applications company. So it's still very in the early days. Just to give you highlight what has happened in 2020 in the table here, these are some of the fundraising done for Reliance Jio Platforms, right, in 2020. So we have very strong investors, for example, Facebook as well as Google, who came in as strategic investors, as well as a bunch of financial investors globally. And so this is exciting because, for example, what you have seen is that Google has partnered with Reliance to produce an ultra affordable smartphone, which will be coming out sometime this year. And as well as for its e-commerce venture, we have Facebook integrating Reliance's e-commerce business into WhatsApp sometime later this year as well. So that looks interesting because this is a new business model that WhatsApp it will be doing, right, compared to most of parts of the world, which is messaging. Apart from that, we also see large companies, for example, the Tata Group, they have expressed interest to creating a super app, as well as they did some investments in companies in online grocery called Big Basket, as well as e-pharmacy called 1mg. And in the unlisted space, but could also IPO in the next 1 to 2 years, there are very interesting companies such as Byju's, which is an education tech company, which is also expanding not only in India, but also in the US. We have also Paytm, which is a fintech company, which is invested by Alibaba. We also have Flipkart, which is an e-commerce company, which is owned by Walmart, as well as Swiggy, which is an online food ordering and delivery platform, something like what you see in Southeast Asia, which is Grab, right? So a lot of things are happening in India. So we think that this is a very nascent internet market, which deserves a lot of attention for the Asia investor. Okay, and in this example here, we highlight the ASEAN e-commerce and fintech. So in terms of, I think you are quite familiar with, some of you might be very familiar with Shopee, for example, which has become very popular, especially over the last 1 year or so. So if you look at the chart on the left, in terms of the gross merchandise value of the top e-commerce players in the world, we see quite a lot of potential because Shopee is only at $35 billion currently, versus the likes of, say, for example, Alibaba, which is at close to $1 trillion, or even Amazon, which is $493 billion. So in terms of the penetration-wise, Shopee, which is mainly in ASEAN, has about, I think the penetration for e-commerce is approximately 6%, versus what you're seeing in China, which is in the 25% kind of range. So we do see a lot of potential for companies like this in ASEAN. And apart from that, a company like, for example, so the company that owns Shopee is called Sea Limited. So a company like Sea Limited would have ventured into new areas, right? Apart from the e-commerce. So they are also going into the wallet, the e-wallet market. And just to show you a sense of the size of the digital payments market in Southeast Asia, it is currently at 681 billion US dollars. If you look at the e-wallet size currently, it is only at $48 billion. So certainly there's a lot of potential there. So we have seen a lot of interest in this new area in terms of bidding for the license, right? So in Singapore, for your reference, Shopee has won the digital banking license as well. And I think in some of the other markets, the bidding process will also be opening. So there's a lot of potential in this space in the longer run. So we just highlight some of the world-class manufacturers in Asia from a historical perspective. So the first example here is Shenzhou International. It is a garment manufacturer, it is a contract manufacturer, and it has been gaining market share throughout the years. So we liken it to the likes of TSMC, which is also a great contract manufacturer, but for in a different space, right? So TSMC, as you know, is a contract manufacturer for chip making. So in terms of what Shenzhou does, it is the garment manufacturer for the likes of Nike, Uniqlo, Adidas, as well as Puma. So very strong names, as you can see here. And so we display here the track record that they have done throughout the years. In terms of the revenue growth, you can see it has been quite consistent at above 10% throughout the years since 2013, right? So that's quite impressive that we have seen. However, in 2020, as you notice, because of the COVID situation, the growth rate has also come off. But what you did notice here in that context is that the growth rate was still positive because they were managed to produce a lot more masks by shifting its production from the other clients to Uniqlo. So going forward as well, you do see some of the consensus expectations that the revenue growth will return back to normalcy. So this is one of the examples, very consistent throughout the years of revenue growth. Now, the second example here would be Wuxi Twins, right? So these are Chinese contract manufacturers, but they are in a different kind of contract manufacturing. These are more sophisticated contract manufacturing for pharmaceutical products. So these companies are called Wuxi Biologics and Wuxi AppTech. Right, so you can see here as well the performance for them over the years since 2015. If you can see the orange as well as the blue line has been quite consistent, consistently high, right, at 20 to 60% sort of range. So if you compare that to what you see in the more developed markets in terms of the big pharma companies, Roche or even Pfizer, the growth rate for Roche and Pfizer is much lower compared to what we see in the Wuxi companies. So these are just some examples of what has happened in the past. And as well, here is a company called Tektronix Industries. What they do is they are a leader in the power tools in the US. And so what we have seen here as well since 2016, the growth rates for Tektronix also has been consistently high compared to Stanley Black & Decker, which is their competitor in the US. So we do see very strong companies in Asia, right? So this is from a historical perspective. It's not forward-looking, but just to give you these examples that we have here, very strong companies that we have seen in Asia. And one area, the next area will be on renewables. So renewables is quite a new area for Asia. So this space still requires a lot of research. And so why Asia? because Asia produces currently 80% of the solar panels for the world. They also have more than 40% of the installed capacity of wind capacity for the world, as well as we mentioned battery makers in Asia. So they produce more than 50% share of electric vehicles battery for the world. So Asia is certainly an important market, and that's where we see quite a lot of potential ideas coming up over the next few years. And in terms of transformation of the business as well, we see traditional businesses, for example, Reliance. So we mentioned Reliance traditionally started off with petrochemicals and refining. So they have also recently announced that they will spend $10 billion over the next 3 years in new energy initiatives. So that involves building gigafactories in solar, in energy storage, hydrogen, as well as fuel cell supply chain. So that certainly looks like a very interesting area to look at as well. So in terms of the cost for solar, for example, solar is at grid parities in certain countries like China. But I think in terms of the expectations of when it will be more comparable, it is by 2030, the generation costs across a range of solar PV projects are expected to be lower than most fossil fuel-based projects. So it also depends on the solar cost, module cost, which if you can see here has also come down over the years. So it used to be very high, approximately in the 1970s, it was $100 per watt, and it has come down to 38 cents per watt in 2019. And we expect this cost will continue to decline. So with that, that was on section 1 in terms of our teams. So now I'd just like to go through some of the recommended funds that is by Fund Supermart. So we have 3 funds here that is highlighted. One is the Principal Asia Pacific Dynamic Growth Fund. This is our conventional Asia Pacific ex-Japan equities. It is high alpha, benchmark unconstrained, and an absolute return focused fund. We also have Principal Islamic Asia Pacific Dynamic Equity Fund. So this fund is managed by myself. It is a Shara fund focusing on Asia Pacific ex-Japan. It is benchmark aware, but not benchmark constrained. So we work very hard in terms of finding new ideas which are off benchmark. And we have approximately a sizable 45% of the portfolio are off benchmark names. And on Principal Global Titles Fund, this is a fund of funds which invest in mutual funds as well as exchange traded funds, which invest in developed market equities in US, Europe, and Japan. So I'll just quickly run through some of the performance. We had a decent track record. So for our Principal Islamic Asia Pacific Dynamic Equity Fund, you can see from the 3 years as well as the 5 years, as well as the year to date, we have been able to outperform the benchmark. So very consistent performance here. So in terms of the top 10 holdings, you'll be familiar with some of these names, but what we mentioned earlier, how we are positioned for some of the teams. For example, you would have heard of Reliance, which we mentioned earlier, which is has successfully penetrated into new areas, real growth areas in the e-commerce as well as the telco space. And as well as we also mentioned about Tectonic Industries, a tool maker, as well in the US, as well as what we mentioned about Shopee, right? So C Limited is the company that has that operates Shopee. So some of these names you'll be familiar with. And in terms of the conventional fund that we have here Asia Pacific Dynamic Growth, and you can see the performance as well has been quite consistent. The 3 years, the 1 year basis, it's done very well against the benchmark. So again, here are some of the top 10 names. So you would have, in terms of battery makers, which we mentioned earlier, there's LG Chem over here. We have Tectonic Industries, and as well as C Limited, as well as Reliance Industries. So some of these stocks are reflected in the top 10. And Global Titans Fund as well, this is our developed market fund of funds. So you can see here, the 5 years performance has also been quite commendable, 68% returns, which implies about low teens returns per annum. So also a pretty decent fund to invest in if you're looking for developed market equities. So with that, I'll end the presentation and we can go to Q&A.
Okay, yeah, thank you so much, James, for your presentation. Okay, so we will jump right into Q&A section. The first question will be about the recent scrutiny in the China market. Do you have your comments on this? And maybe some of them are a bit more concerned on the China market. Perhaps you could shed some light on it.
Yeah, sure. So what we're seeing now is the government has been intervening in terms of the operations as well as anti-competitive behavior for the internet names especially. And the way we see this is the policy tends to move in a pendulum. So some years there is policy becomes stronger. So this year is particularly strong. And other years, the policy moves on the other side. So what we have noticed as well, for example, in terms of what we've seen, for example, in Tencent, and many people have forgotten this. Many years ago, I think, not many years, sorry, 2018, right? The government has expressed concern, for example, on Tencent's influence of their gaming for juveniles, right? So basically, the students, the kids, in terms of their time spent. So at that time, I think the pressure was on, for example, for a company like Tencent. But a company like them, if they were able to solve these issues, so it typically takes some time to solve these issues. And what we have noticed after they solve these issues, the stock tends to go up, the operations tends to be stronger. So the way we would approach this is that regulations tend to move in pendulums. And it is important to identify some of these companies that are able to overcome this in the longer run.
Okay, thank you very much. Would you be able to shed some light on the Southeast Asia equities moving forward?
Yeah, sure. So Southeast Asia, unfortunately speaking, compared to the more developed markets, for example, in Korea, as well as Taiwan, or even, for example, in China. So Southeast Asia lacks compelling stories. That is what we have noticed over the years. But there is, once in a while, there will come, we are able to identify some of these ideas, but it comes quite rarely. So for example, here we'd like to highlight is Sea Limited. So Sea Limited is an ASEAN company, right? So Shopee operates mainly in ASEAN. And precisely because of that, they are not competing in China, where the competition is intense. Sea is able to do quite well as well in this part of the world. But a company like Sea Limited is quite rare. So I would say in this part of the world, in ASEAN, unfortunately speaking, the ideas are not as compelling as compared to some of the more developed markets and even some of the deep domestic markets, for example, in China or India, which we highlighted earlier.
Okay. James, moving forward in the coming months, okay, we have seen, in fact, in the previous months, we have seen the rising valuations, especially in the US market. It has reached all-time highs, and every single day they have been making all-time highs. What is your outlook for the US market, especially maybe not the long term, but maybe until end of the year? Or perhaps you can also shed some light in the long term. What would your prospects be for the US market?
Yeah. Okay. So in this regards, I would have to clarify that I'm more of an Asian specialist. But what we have noticed in the US in the near term is that the consumer consumption has been quite strong. So we think that is one of the drivers if you look over the upcoming year, as well as the housing market is strong, the equity market is strong. So certainly the wealth effect is quite strong in the US. And in terms of what we've noticed in terms of the vaccination rate as well, so US has, the developed markets especially has a very high vaccination rate compared to in Asia. So in that regards, their growth will tend to lead the rest of the world. So that's broadly speaking where it is right now. Yeah.
Okay, got it. So I think, okay, right. So why not we just come back to Asia Pacific, okay, and we'll focus more on questions on Asia Pacific. So the next one will be with the rising cases in certain countries like Vietnam, Korea, Malaysia, in fact. So do you see the light at the end of the tunnel, especially for our markets? How long do you think will the volatility last? And how long until you think that we can see a recovery in this part of the region?
Yeah, sure. So in terms of the COVID situation, I think you highlighted rightly that there's been a deterioration, especially in ASEAN. So we saw Indonesia, we saw Thailand, as well as Malaysia having quite a high number of cases or resurgence in cases. And we also saw a high amount, as you mentioned, we also saw some cases in Korea as well as, and actually one of the biggest market was India, right? So 2 months ago, India's cases were spiking to a very, very high level and has since come down very, very fast as well. So what I would like to highlight here is that cases come and go, right? Of course, we would not want it to happen in the first place, I mean, or to spike in the first place. But cases will come and go, and there will be light at the end of the tunnel. So it's just a matter of time. So what we have noticed, for example, in Thailand, for example, in terms of the tourism names, so it may still be quite early or premature to own a lot of the tourism names. But we do see that, as we move forward to say 2022 or even 2023, I think there was a lot of interest that will return into some of these names. And so each market will be, the impact on each market will be quite different. So for example, in Korea, where a lot of the companies are more exporter driven, so for example, Samsung Electronics, so these companies are not so reliant on the COVID situation in the particular country. So that's how we should approach this, as compared to, say, for example, in Thailand.
Okay, all right. Thank you very much for your response. Okay, the next question will be, is there any sectors, in any particular sectors, or if possible, would you give out a few names on what is the next most exciting thing that you think of, especially for your fund that you manage? What do you think will be the next thing that will give multi-baggers or multiple returns? Similar like what we have experienced in the glove stocks. During the height of the COVID cases. What are your thoughts on it?
Yeah, so we can't share some of the specific names, but in terms of the areas that we're looking at, let's run through some of the areas which are highlighted. So these areas are very interesting areas. Some of these names may not even come out now, but eventually I think some of these names, some of these ideas could look interesting. So electrification of vehicles is definitely one area to look at. So this can be in terms of battery makers, not only battery makers, but also the brand owners themselves, right? So we are seeing a lot of new companies that are emerging. For example, in China, we do see some of these new companies that has emerged over the last few years. But unfortunately, they are also very early phase in terms of, profitability, right? So most of these companies are actually not profitable yet. So the judgment required from an investor is quite high over here, and the monitoring and the engagement with management over the next couple of years to see how well they're doing or are they able to execute their strategies. That will be quite important to look at. So electrification of vehicles is definitely one area, very important area. And it's not only a 1 year thing or 2 year thing, it's probably a very long-term thing. In terms of deep domestic economies, we do see this also as a very, very long-term trend. What we see in China as well as what we see in India, for example, where the population dynamics are very favorable, as well as there's a lot of population, sizable population to cater for their own demand needs. So I think there will come a point where there will be more ideas to look at, and certainly I think it's been a multi-year team, right? I think not only looking forward, but also historically, deep domestic economies is we're able to find quite a lot of ideas there. In terms of the new information technology, so some of these names you probably haven't heard of before this. So prior to the last few years, for example, Sea Limited was not a very well-known stock, right? So there was a lot of doubts when it first listed, for example, Sea Limited, whether they can execute on their e-commerce strategy. They had to compete with the likes of Lazada, which is owned by Alibaba. So a lot of doubts there, right? But over the years, they will have proven themselves. So we do see some of these as an ongoing case where we have to see how well they do over the future, right? And we continue to find world-class manufacturers. And lastly, in terms of renewables, this is a very new area. And also in this space, there will probably be more things to look at going forward. But again, because the renewables, in terms of how the market sentiment comes and goes, so it requires a little bit of, in terms of the entry point, also requires a little bit of judgment, right?
Yeah. Okay, thank you very much, James, for your answer. What's your opinion on AI and fintech development in Asia?
Yes, so for AI, unfortunately, there's no pure play AI companies right now. There has been, in China, we do see one in the private space, which, for example, has been mentioned quite a fair bit, but also is not in the listed space. So AI is actually happening right now in the large companies, in the likes of Tencent and Alibaba. So in terms of having pure plays, we don't see that. In terms of using AI to drive other parts of the business, so we do see that in the large companies, which is, for example, Alibaba or Tencent, but they're not pure play AI companies. So that's the situation for AI in, for example, this part of the world. So it's also very different compared to, say, for example, in the US, you maybe have a company like Palantir, which is more of an AI kind of a company, right? The other point which I would like to highlight here is AI can be used in the sense of, for example, in terms of autonomous driving. So we do some of these new names, for example, in electric vehicles. Some of these companies are developing autonomous driving, and this is more in China, what we see in China. So probably in the next few years, we do see the mass usage of autonomous driving. So that is a form of AI as well. And your next question, what was the other question?
Fintech.
Okay, yeah. So fintech is also a very new space. As I mentioned earlier, a company like Sea Limited has just only, for example, got their license in Singapore, and Singapore is one of those first of the at the forefront of it, right, in terms of awarding a license. So I believe Malaysia is also going through the award of license stage. So it's still very early stages. So unfortunately, we don't have too many names to look at into this area as of now, but it's certainly a growing area. So like I mentioned earlier, in terms of the potential that we have in ASEAN, for example, over here is the digital payments market is $681 billion in ASEAN, right? And for example, e-wallet is only $48 billion. So that's for Southeast Asia. For China, the market is more developed. So we have the likes of Ant Financial, for example. But of course, they have gotten their fair share of intervention from the government.
All right. Coming back to the fund-specific criteria. Okay. So I believe that you have mentioned something about benchmark aware but not benchmark constrained. Perhaps you could shed some light on what this actually means.
Yeah, sure. So in terms of this is relevant more for the Islamic Asia Pacific Dynamic Equity Fund. So typically how it's run is that the immediate universe of investable ideas is the benchmark, which is, for example, the MSCI Asia Pacific Islamic Index. But what we have here is the flexibility to invest in stocks which are outside this benchmark to add alpha to our performance. And for example, here we have approximately 45% of the portfolio of benchmark names. So this is one of the main methods which we gained alpha for our investors.
Okay, speaking about that, one of our viewers are actually quite curious. Why is Volkswagen AG from Germany in the portfolio of an Asia Pacific fund?
Yeah, so that Volkswagen is in principal Asia Pacific Dynamic Growth Fund. So what we have here, as you correctly spotted, yes, so we do have a Volkswagen AG here. So the fund would have also allowed us to, the prospectus of the fund would have allowed us to invest in companies that have sufficient revenue in Asia ex-Japan. So in this case, considering that Volkswagen has quite a sizable presence, especially in China, through its joint ventures, we were able to invest in Volkswagen.
All right, Ken. All right, I think we are running out of time. Okay, we would like to thank you so much, James. Maybe do you have a final word on what makes Principal special, or what makes your fund a special fund, so that you could shed some light on your funds?
Yeah, sure. So in general, we are high alpha, benchmark unconstrained, and absolute return focused. So if you look at even on the Islamic fund, we are benchmark aware, but not benchmark constrained. So we also continue to find ideas which we think will be able to make money, and basically back to our absolute return focus approach. So we have a very strong team of investment team, and we work very hard in terms of finding new ideas for our investors. And as you can see, in terms of what we highlighted earlier, in terms of our track record, it is not a 1 year performance. It is a 1 year, 3 year, 5 year kind of performance that we have.
Okay, Ken, thank you very much, James, for the time that you have spent with us, also for sharing your knowledge with us on how you see the market moving forward. Okay, so for all of you who are joining the show tonight, okay, please be reminded that this entire month is a month where we bring in as many fund managers as we can and share as much insights as we can to you, so that you can make better investment decisions in the coming months. Okay, so head on over to www.fsm1.com.my. Okay, over there you'll be able to see our list of recommended funds. All of them are on a 0.5% sales charge. Please feel free to have a look at that. Have a look at the fund fact sheet and see if these funds are good for your portfolio. Okay, so tomorrow we have M Invest on the show, so stay tuned, and we'll see you again tomorrow, same time. Okay, goodbye. Thank you.